Hello, everyone, and welcome to today's live stream. I've, I've just haranguing David. Poor David. He's always getting in the neck about something. Thank you so much for coming along to join us for this session. We're certainly, I think we've restarted these live streams at exactly the right time because the markets are in a very interesting state, to say the least. Today, it's a bit of a crunch day because we've got some CPI data coming from the US. As you know, there's been a shutdown in the US, so we haven't had any data such as the non-farm payroll, etc., because of the government shutdown. I'm not quite sure how the CPI data has evaded the shutdown, but whatever the reason, that is what we are going to get. How is that reflected in the charts is also extremely interesting, and what we want to cover. We're going to cover futures, and we're also going to cover Forex as well. Who's going to do Forex and who's going to do futures, we don't know, but we're probably going to do it together. And obviously look at what VPA is telling us, also as well as the charts themselves. So I'm actually going to start with sharing my screen here. I'm not actually going to start with Forex. I'm going to start with the broader market as reflected by the MNQ. Now, the MNQ is the E-mini for the NASDAQ. And what I really want to highlight, there are a number of things I want to highlight on this chart. And one of them is to explain perhaps a little bit more about volatility and its significance, its importance, and how we have to try and deal with the unexpected volatility that we got. I call it the Trump candle, which was Friday, the 10th of October, which seemingly came out of a clear blue sky. I think in some ways we'd all become a little bit complacent. Those of you who were trading around the time of the first Trump presidency will know the impact that his constant tweeting would have on the market. But he's been quite quiet, or at least he was quite quiet until the 10th of October. And boy, oh boy, did we all suddenly wake up and discover the impact that he had. Now, how I've set this chart up, this is the daily chart. And what I have here is I've obviously got the chart and the indicators I'm using. I've got these little yellow triangles here. This is what we call our pivot indicator. The purple one is the one that is the most significant on this chart. This is what we call our volatility indicator, and it is triggered in real time. It is triggered when this candle was being formed, and it's more than an early warning system. It is telling us something serious is going on in terms of volatility. Now, just to clarify about volatility is non-directional, except in one case, and either I or David will explain that in a bit. But when we talk about volatility, it's an explosion. It's a sudden burst of energy. Momentum comes into the market, but it is non-directional. There is a definition of volatility in one of our books on binary options, and it's a definition that David came up with, and I think it's absolutely brilliant. And in fact, we've had some very nice comments about it. And this is the compression of time. And what we actually mean by that is, if you look at this candle here and the range of this candle triggered by this seemingly unexpected event, let's just call it an event because it could, it just happened to be Donald, but it could be something else. What do we mean by compression of time? This candle here in one day has wiped out all that price action which I think is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 9. It's about 21 sessions. So you've had that amount of price action, which is the equivalent of 21 previous sessions. That's what we mean by the compression of time. So it is a fairly dramatic price move. What happens after you have such an explosion of volatility coming into the market? Most of the time, you have what you see happening here. You have a retrace into the spread of this candle. And this candle then becomes the dominant candle on this chart, and it will dominate the price action until the high or the low of the candle is taken out, and the ultimate direction of the price action will continue. So until this is taken out with good volume, then this rally will continue, or if it's down at the bottom, we will then get the definition of the reversal. It's quite unusual to see the, let's call it a congestion, because it's congesting within the consolidation within the spread of that. It's quite unusual to see quite so many going on for quite so long. And it's testament in part to the force of the volatility. So it's like if you throw a small pebble into a pond, you get ripples. But because it's a small pebble, the ripples will, dissipate quite quickly. If you throw a huge rock into a pond, the effect of that is going to take a little bit longer for the pond to calm down. And what was interesting in the spread of the candle, you can see we had some big ranging candles. We had an up day, a down day, an up day, a down day, an up day, then an up day, and then a nothing burger day. Just nothing. Then we had a down day. And now we seem to be having a continuation of yesterday's up move. And of course, there's nothing wrong with trading within the spreads of these individual candles. This was a really tricky day, but the rest of the days it was a great trading opportunities, both to the long and the short side. And of course, we then look at the shape of the candles. Do we have wicks to the bottom of the candles? Do we have wicks to the top of the candle? Because that will then give us a clue as to what may be coming the next day. The volatility candle itself, you can see it actually ended with a wick to the bottom. So that of itself would tell us that from a price action perspective, we were going to see some kind of reversal. What's interesting, though, with this candle, if you look at the volume, this is an anomalous candle in the sense that for the size of this candle with that kind of volume, what is that going to tell you? Plus you add the wick to it, the chances are, well, more than the chances are, it is going to go within the spread of the candle, and the likelihood, the probability, it is going to go to the upside, which is exactly what it did. And we have quite a lot of volume coming in here. That's a nice up candle. You've got high volume. That's got a big wick. That's got high volume. This has got high volume, but you've got a wick to the top of the candle, so no surprise to see the price fall, but then it did recover. And then we have this one. So there is these individual candles, whilst they're within the spread of this candle, individually of themselves are telling you that what is likely to happen in the next trading session. But from an overall perspective, until we take out the high and until we take out the low, we need to confirm the direction. What does it look like at the moment? It certainly seems as though it wants to go higher. My only concern about this is the volume under this candle, because you have a really deep wick to this candle, and you have below average volume. I have an average line that I put on the volume bars, and I use a 20 period for the slower time frames, which obviously the MNQ is the daily chart. What is also really important to understand with volatility, such a candle as this, is when it appears on the slower time frames. And what that tells you, it will tell you what kind of trading condition you can expect on the faster time frames. Now, this happens to be the MNQ, but you see these in other assets as well. And I have some moving averages here. What do I think about? I'm often asked about moving averages. The moving average is not so much what I think about the moving average, it's what the market thinks about the moving average. We all have to remember we're all looking at the same charts, and this business is psychological, and trying to anticipate, well, what is everyone else out there thinking? And if the market, this is the 20, this is the 50, if prices bounced off there before, as we can see here, as we can see here, as we can see here, who am I to say that the 50 moving average is a complete waste of time? Because there's obviously a market consensus out there. There are people who trade it, and at the end of the day, if that's going to reverse the price, or the price holds at that average, I'm going to follow that belief. It's 50. It could be 45. Why not 55? Why not 60? That's what the market collectively has decided. Whether it's right or wrong, mathematically, philosophically, scientifically, is really neither here nor there, because the thing that defines this market is psychology, human psychology, and we have to be aware of that. So that is where we are at the moment. Now, the other indicator I have on here is what we call our VRSI, and that's the volume relative strength indicator, and it is volume based, and it's a really interesting indicator, especially on if you are an intraday trader and you're on the faster time frames. It works on all the time frames, but it has this median line here. And what you have with it, and I call it this, you have the flip. You have the flip where, from a volume perspective, it is telling you that even though the price might be falling, or even though the price might be rising, from a volume perspective, that move is probably coming to an end. And we then have to look at the candles. Are we going to see an anomaly? Are we going to see some kind of exhaustion in terms of a shooting star or a hammer? So it is very, very, very well. It isn't really a lagging indicator, as most other indicators are. I would say the volatility is a leading indicator, and I would also say that the VRSI is a leading indicator as well, because it tracks the volume. Now, on the faster time frames, what I've done just to show you is, because then we talk about levels, and those of you who come along regularly will know I don't try and clutter my charts too much. And the great thing about TradingView is you can turn things on and off. I've got the volume point of control, which I only put on just to give me an indication of when I think the congestion period is going to come to an end. We have here, I've got the Camarilla levels, because I need to know what the key support and resistance levels are. And we've also developed a multi-purpose VWAP for all our platforms, and this is just the standard VWAP, and I'd just like to know if it's congesting along the VWAP, has it pulled away from the VWAP, and of course I've got the volume, the VRSA, and this is really the sort of example I was talking about. You can see here what we have here is we have a congestion. It's following it, but you can see the volume is dying away, which is what we would expect in a congestion. And then we have the beginning of the flip, and it mirrors the volume that is coming. So it's kind of highlighting that possibly we are going to see a turn from congestion, falling volume. There's more buying volume coming in. We can see it here under this candle. This is actually a volatility candle. What happened? It reverses into the spread of the candle. And then we go back to reading our VPA. Yes, it reverses. It looks like it's going to have it's going to go to the downside. We have that, but look at the volume. We have falling volume and we have falling prices. This little candle here, yes, it is falling, but it's got a wick to the bottom. There are little wicks here and here. And it's also critically, it's on the R3 and it's also on the VWAP itself. So then we have a little bit of congestion where these bars sort of don't go anywhere. And then we have the break higher, and we have the break higher with the volume rising, which is what we want to see. So we have a really nice setup from VPA first, confirmed by the indicators. That is really, really important. The VPA validates the indicators. The indicators do not validate the VPA. This is what we're seeing. We could turn all these off. And I know there are traders out there who do. David, he doesn't use, he has it. He has a mental picture in his head. He's been doing this longer than I have. He's quite happy. Some of us, myself included, I like to just see what is going on. But some of the times I just turn them off and I turn them back on again when I just want to have, is there a confluence? I think that's probably why I like to have them on, because if I have two key indicators telling me from a support and resistance perspective and from a volume perspective that we are looking at a significant setup, as it were, then that's all they're there for. They're there to support our initial VPA analysis. So this is the 3-minute chart. I then have the hourly chart, and the reason for the hourly chart is very simple, and it's because for the Camarilla, the levels that come up on the hourly chart are there. They're valid for a whole week. And what is interesting on this, what this tells me is it's heading for here. It gives me an idea of potential targets. It's also useful for maybe placing stops, as you would do on the levels that are on these faster timeframes. All the timeframes up to but not including the hour are refreshed every time the session rolls over. So it's 24 hours. On the hour, we're right up to the day. They are refreshed once a week. The third and the fourth levels are probably the most significant in terms of strength, in terms of potential reversal, and where price can congest for some time. So what we're seeing here at the moment, where is it heading to? Well, the logic is it's heading back up to 25.4 Now, this analysis, I've used the MNQ. I would have exactly the same analysis on any other asset or market. I've got some Forex here, which we'll have a look maybe later in the session. That's what I want to say on that, because I really wanted to cover volatility, especially on the slower timeframes, and also how you would interpret that, what it's telling you, what is going on when you have such a huge candle. As I said, I have heard this type of candle described as the master candle, and you can look it up on the internet if you wish. And there's this idea that you will have at least 4 candles that will be within the spread of the candle. I don't think you can say that, because it really depends on the extent of the volatility and the range of the candle. But for myself, I like to use the expression the dominant candle, because it is dominating the current price list, and it will continue to dominate the current price action until we have a clear break of either the high or the low. And of course, it's even more critical because for the MNQ, as with the SPY and the QQQ, you have very similar looking candles on those two ETFs, they are touching the all-time high for each of these three charts. Right. If you've got any questions, please put them in the chat. I'm now in charge of responding, and I would like to pass you over to David, and I will stop sharing.